All right, we will go ahead and get started here. Just one thing to note, you can submit questions and they will be answered at the end, so feel free to do so throughout any time during the webinar. And thank you again for joining. This is Digital Fluency in Finance, how to adapt and evolve your business for a digital first future. We're going to be discussing some best practices around reviews specifically for financial services companies and how they can really create resilience moving forward post-COVID-19. A little bit about myself. My name is Emily Baumgarten. I am a finance account manager here at Review Trackers. Prior to joining Review Trackers, I actually worked at Morningstar Inc., helping financial institutions, primarily advisors, RIAs, asset managers, to improve investment data and software capabilities. Here at Review Trackers, I'm responsible for identifying problem areas in the online reputations of financial businesses and implementing lasting solutions. Building resilience for the future. So why are reviews important? Reviews account for 20% of SEO, which determines how your business ranks in search results against its competitors. And since 92% of people pick a business on the first page, it is imperative that you have a higher than average rating, which could mean above 4 stars, which is the average for financial services as a whole, and you have to have a higher review volume as well. Financial services is the last major industry holdout of the review revolution. However, we have seen many financial sectors, such as insurance, mortgage brokers, and banks adopt review management techniques over the past few years as they come around to the realization that the majority of millennials will only trust a brand that has good public reviews, and even more so the millennials, that 92% of people that do see the business on the first page are relying on reviews to make their business decision. And additionally, millennials are set to inherit $68 trillion from their baby boomer parents. So this is not a revolution to sit out on if you're hoping to maintain your market share. So how to remain competitive and win generational wealth. To navigate wealth transfers to younger generations, it's important to reach these new clients on their turf to retain market share. Younger generations are driving the shift toward digital banking, insurtech, and robo-advisors. So traditional financial institutions must build a strong online presence to be found over these disruptors. At the end of the day, these online-only providers are experts in digital marketing and will use that to push traditional providers to the second page of search results where they only receive 8% of clicks. And those traditional provider listings, that could be your corporate headquarters, that could be your agent listings. But at the end of the day, you want to make sure that those are competing with those online-only providers and your competitors in your region. During the last couple of months of the quarantine period, we saw this type of marketing have a more powerful effect than ever before. As people could not visit their financial institutions in person, local searches for agents or banks near me decreased substantially, while searches for online providers increased. Not to mention that 80% of millennials are actually currently using online insurance providers, and that's before COVID-19. So insurance is one of the first sectors to be disrupted, as we've seen. And with those same policyholders considering a change every 6 months, there is a huge opportunity to win market share from the competition. And insurance is really not alone here. We have the same for banks, credit unions, even financial advisors are seeing this as well. To prevent against disruption and churn in the future, traditional providers, agents, advisors, credit unions, and banks must cultivate a better review experience and presence on their listings and listen to the voice of the customer so that they may provide excellent customer experiences and continue to differentiate themselves from the click portals and even local competition. So there is something to think about here for some of you, I'm sure, which is the SEC advertising rule. Some of you may be thinking, well, this is nice and I'd love to have more reviews, but reviews and testimonials are regulated for my industry. As it stands, you would be correct. But what you may not know is that in November of last year, the SEC provided amendments to the advertising rule that would permit the use and promotion of reviews by advisors, as well as the ability to request reviews so advisory firms, broker-dealers, RIAs, and even insurance agents that do offer investment advice can take advantage of the SEO boost that it gives them. I do expect to see this rule passed in 2021. So what does this mean for you? As we've discussed, resting solely on referrals from current clients will probably no longer suffice in the digital age to maintain that market share. Investors have all of the power to search for better options online and no longer rely on in-person interactions or advice. So as it stands, individual Google listings for financial advisors, insurance agents, banks, and lenders alike have less than 5 reviews on average. This is actually an asset. It may not sound like it, but I promise it is. This is important for a couple of reasons. The first being that with so few reviews, your rating can be disproportionately lowered by just one bad review, misleading any potential customer who sees your listing to believe you do not promote a good customer experience. And on the flip side, if someone leaves a positive review, it can also substantially increase your rating. However, to create that resilience, you really do want to request reviews. And if you do request just even a few reviews, you will easily surpass the review volume of your competitors, moving your listing to the top of the search result when anyone types in bank near me, best local advisor, earning you up to 50% more eyes on your business and more qualified leads and revenue. So how do we build this online presence? There are a couple of things you can do right now, and I know I do have some current clients on the line as well as prospective clients. So current clients, bear with me for a moment. Things you can do right now, even without any sort of reputation management software, is respond to those reviews. We already said, the average review volume is around 5 per listing. That's for agent listings, corporate listings. Respond to all of those reviews. That will not only give you an SEO boost because Google likes seeing that responses, it will also show that your brand is malleable. It listens to the feedback of its customers. So to that end, respond to reviews, as I just went over, showing your customers that you care about their feedback will grant your business more credibility. And negative reviews that receive responses are actually 50% more likely to be taken down or edited. That's huge. And not to mention responding to a review that may speak badly of your customer service, as most negative reviews do, immediately debunks that review. It proves that your institution is responsive to feedback and listens to the voice of the customer. So that's the easiest thing you can do right now. The next thing you can do is request reviews. So you can do this on your own. This is something that we do see a lot of clients doing on their own. It just takes a lot of time. What we recommend doing is requesting reviews from all clients. That's because the clients that already leave these reviews on your site and your Google listings, they likely had a negative experience, right? It doesn't take much for someone who had a negative experience to write about it on a listing. But someone that had a good experience, especially if they expected to have that good experience, may not think to write a review. So we do recommend requesting reviews from all and any clients, customers, policyholders, etc. Not to mention with financial services, these are businesses that are built almost entirely on referral-based business, right? So with referrals, if you have, however many percentage of your revenue is based on referrals, think about that, how it could be translated to reviews. If you ask someone for a referral, it's not far off that you could ask them to actually write that referral down. So it would be a review on Google, Yelp, TripAdvisor, Wallet Hub, whatever it may be. And then it's seen by thousands of people, hundreds maybe, but maybe thousands, rather than that one friend they told over dinner. Another thing we can do here is add reviews to your website. So this is from something that will really create resilience against online-only providers. When you search insurance near me, or even just home insurance or banking, best banks, no doubt there will be online-only disruptors that show up. So you have to make sure that your website is built out so that it will show up in that first page or even hopefully the second page of search results when someone searches that. To do that, you want to make sure that you have customer generated content on your website for a couple of reasons. Google likes seeing that. It shows more interaction from the customer, so they'll actually promote your website more so. And it also just gives prospective clients the ability to see more information about the experience that you provide, right? So they don't have to go necessarily to Wallet Hub to see the reviews. They can go straight to your website. And with something like review trackers, you can actually have an aggregator that brings reviews from all different sites to your website. Some financial services companies use this now, and they call it testimonials, which is great for those that can use testimonials. But really having kind of a feed of that client feedback is what gives you that SEO boost. So one of the last things I want to cover is monitoring app reviews. And this again relates directly back to beating out those online only disruptors and even the big banks or the big insurers if you're a smaller bank or a smaller insurer or a smaller institution of any kind, right? You don't have the budget necessarily that these online only providers and massive companies have, but you still can listen to the voice of the customer if you do have an app and make it that competitive experience. With app reviews, additionally, even though some listings, as I mentioned on Google, may have only 5 or 6 reviews, app reviews typically have much more. So they can have thousands of reviews even. And that has to do with the way the App Store requests reviews and the Google Play Store requests reviews. It's just a little bit faster and people are more likely to, tap that 5-star on their phone. But they do give qualitative information there, and listening to that information can help. And it also can give you very immediate information to see, hey, is my app crashing? Is there something wrong with the app? And you'll see 10 reviews pop up right away saying, hey, I can't log in. So it's a really easy way to make sure that you're providing the best customer experience at all times. And this type of monitoring can translate over to your listings reviews as well, and make sure that you have keyword alerts set up so that you understand, is there any issue with fraud, compliance? You can set those up to make sure that any sort of troublesome word comes to your attention right away. So embracing digital transformation. Majority of consumers would switch to a different financial institution for a better experience. With the emergence of online-only providers, that presents a threat to market share for our traditional providers. Essentially, to compete, we've gone over ways that you can do that right now, like responding to reviews, requesting reviews, and building that online presence. But if you really want to take a serious look at the way that your company creates its own marketing profile, you probably should look into reputation management technology to monitor that on a large scale. The general population has adopted technology as an integral part of their lives. If financial institutions choose to leverage online activity by responding to reviews, engaging with customers online, and proactively listening to consumer needs, they can grow their customer base through improved online experiences and seize the millennial dollar. Thank you so much for joining here. This is a great time to ask questions. I will be happy to answer them. We also will be following up with a recording of this webinar, so you can pass it along to others or rewatch it if you really enjoyed it. And we also will be following up with other resources as well. So I'll take a look at the questions now. Should the reviews on our website be on the home page, or should they have a page of their own? That's a great question. It truly doesn't really matter if you have microsites within your website. You can have those reviews show up there. What we have seen with a lot of providers that do have, agents or advisors, just individual practitioners or franchises, they will actually have those individual reviews for that agent on the agent's page. So it promotes them as well and gives those individual agents and franchises the power to request reviews and generate more leads. Okay. What is the best way to look at competitor activity? That's a great question. So we've gone over those online only competitors. We've gone over local competition. You can obviously go through manually and check and search best advisor near me, best advisor in Chicago, and see who the competition is. But that takes a lot of time. Review Trackers does have a competitor capability that will allow you to actually aggregate the reviews of your competitors so that you can see, are they responding to reviews? How many reviews do they have? What are their ratings? And that's a really easy way to see, what do my ratings need to be to beat out this competition? So having a tool would be helpful for that. Absolutely. What would you recommend doing if you have a larger, older population of customers and they're slower adopters of new technology, but we want to be there and available for a younger generation of new potential customers? Well, with the disruptors, we have seen more millennial adoption. That's not to say that the older generations are not adopting those as well. I would say just continue to provide that excellent customer experience. One of the major assets of traditional providers is that they do provide customized experiences because they do have those agents, the customer service professionals, the advisors on the ground to provide that type of attention. So just continue to listen to clients, aggregate reviews. I promise you the older generations are also leaving reviews. Aggregate those reviews, pull out keywords, pull out trends to make sure that you are providing what your customers need. Do you think bank near me searches are more beneficial or for smaller independent banks or for national chains? We struggle to compete with other national banks that have more locations overall. Typically, national banks that really are large, they have massive marketing budgets, right? So they may have already adopted something like this to promote reviews on their listing sites. So you can beat them out, no problem, as long as you also focus on that. I do believe it's important for independent banks and national chains, but maybe especially for independent banks because you are going up against these huge budgets. But what we do at Review Trackers, we help those smaller franchises, those kind of mom and pop shops, and franchises with locations of around 20 to 400, whatever it may be, really promote themselves online against those national banks. So it's important for everyone. What is a good way to promote your app if it is new? If you have a new app, I definitely recommend sending out a blast to all of your customers to make sure that they know that it's there. Having an app is almost non-negotiable today to compete with online-only insurers, to compete with online-only banks, etc. You really need to be able to match them in their capabilities. And to promote the app, I would say, feel free to write a response in a review. If someone says, hey, like I couldn't get the website working, or maybe the customer service wasn't up to par, right, in the response saying, hey, we have this app that you can actually do all of this online. Promote it in any way you can. Let's see if there's any other questions here. Are there any new ways to continue marketing to our older customers while attracting younger audiences? Absolutely. I mean, you really can't go wrong by responding to reviews and requesting reviews. It provides touch points to all generations. So I wouldn't say that necessarily relates more to one over the other. But yeah, to all customers, you want to just make sure you are interacting with them, creating that customer experience that is excellent and better than competitors, and just making sure you're listening. Okay, I think that's all of the questions we have. If anyone else has any questions, feel free to throw it in now. If not, we will follow up with more resources, as I mentioned. Thank you so much for joining me for this quick webinar. I so appreciate it. I hope everyone has a great day.